ABSA Capital, providing financing, risk management and advisory solutions. ABSA Capital, born to redefine.
We've come through some very interesting times in the last 18 months. No doubt, I think everyone can appreciate the level of volatility that has pretty much characterized the market, but we've seen a rebalancing in terms of resource allocation by asset managers. Previously, I think probably 18 months ago, we were down at probably fixed income being relatively low at 6 or 7% of total assets, and that is looking to creep up towards the more traditional stable level, around about 18-20% of fixed income as a proportion, which means there's been a lot of interest, a lot of focus, a lot of buying in the last sort of 12 months, and we've seen some significant issues come to market, all well subscribed, in fact oversubscribed substantially, and in addition to which we've seen the spreads compress, which has been very good for the market to see it a kind of resurgence like this.
Of course, we are seeing balance sheets looking pretty healthy in South Africa, particularly balance sheets for banks. So who is going to market and borrowing?
That's the eternal question. Banks have got very healthy balance sheets. They've got a lot of cash, a lot of money floating around, and unfortunately, we were talking about, well, what keeps you awake at night? Essentially, there's a pedestrian growth in the economy, and this translates into very limited borrowings. So we're finding that asset creation is limited, and what you're finding is that anyone that's got money is aggressively pursuing assets, not only in search of yield, but in search of assets generally. And that has opened up a whole new dimension in the debt capital market space. We've seen securitization come back into vogue, albeit slowly. We've seen interest moving down the credit curve into the more high yielding spaces, where traditionally South African investor mandates have been a little bit cautious. So it's a bit of a balancing act at the moment, and I think everyone's watching the global markets fairly carefully to see what impact that might have on us going forward.
Of course, we saw lots of securitization vehicles wound down during the credit crisis, particularly from the banks. What sort of appetite are we seeing for securitization, and is it still seen as one of those opaque things that are off balance sheet and investors don't really know where it is?
I think a lot of progress has been made in that regard. I think there's been significant changes in rating agency methodologies, and a lot more transparency has been brought to market. South Africans are quick to learn, and I think the South African market has always been probably undervalued in terms of how thoroughly they research and disclose in terms of securitization. So I think securitization in South Africa got a really bad rep in the beginning, and part of the reason I think is there's a maturing of this segment of the market, the debt capital markets, and along with that more transparent disclosure, changing methodologies, we've seen interest parties come back to the market, not significantly yet. Having said that, because we haven't seen the spread compression as much as what we'd like to see in the securitization market, but it's becoming a vehicle. It's coming into its own again, and yeah, we are hopeful that the years to come, securitization will take its rightful place amongst the debt capital market funding instruments.
Well, you said asset creation is limited in this market. What's pricing like in that case?
Pricing, obviously, when you've got an oversupply of cash and an undersupply of assets, pricing is good. It's not as good as what we saw 3 years ago in 2007, but then again, I think we were obviously in a very steep learning curve and a bit of a hothouse effect, still to learn the effects of volatility in credit. But the pricing is good. To give you some examples, a lot of the major corporates, their credit spreads have pretty much halved in the last 12 months. So it's looking pretty competitive from a funding point of view to use the debt capital markets. And I think going forward, maybe with the allocation of resources leveling out, we could see the credit spread contraction slow down. I believe we probably see a period of stability in credit spread movement. But it all, you add that on top of the fact that we probably at our lowest interest rates in maybe 30 years, certainly in the swap markets and prime rates and the like. So the absolute level of interest rates is significantly attractive. I mean, it's ironic that you've got really good funding opportunities and yet the economic growth outlook is a little bit tainted.
Well, of course, we've seen big foreign appetite for government debt. Are we still seeing that for corporate debt as well and parastatal debt?
Well, put it this way, government debt, absolutely, and I think our National Treasury has done a significant job of promoting South Africa, and I think to be followed shortly by a lot of the parastatals internationally. I've got to stay, first of all, ideally to raise capital in South Africa if you're needing it in rand. Obviously, if you need it in foreign currency, it's another consideration. But it's certainly, while the availability is here, to raise it locally is good, and there's certain appetite for that, absolutely. But you also got to be wary of over concentration. Mandates are pretty restrictive in some instances, and certainly you don't want all your eggs in one basket. And to that extent, the big borrowers, and Eskom would be an example of that, would need to go offshore to diversify their sources of funding, absolutely. For the smaller South African corporates, in fact not even small, just for the South African corporates in general, our investor universe has grown substantially in South Africa, and unless you're going to be in your head for over more than 20 billion, I think there's good opportunity to raise significant cash in the domestic markets at reasonable rates.
Do you think the capital we're seeing coming into South Africa, though, is sustainable, or do you think we could be seeing a bit of a bubble forming here?
Interesting question. We certainly, much debate around this. We've seen 70 to 80 billion flow in terms of the fixed income markets alone this year, which is significant. One's not always terribly sure where it ends up. Certainly one would like to see it involved in infrastructure. The question is, what are interest rates, and what are the alternative attractions and alternative investments that might be had in international markets? I think we're pretty safe for the next year or so, but one never quite knows the flightiness or the volatility of that cash. And if it does decide to move offshore for whatever reason, it does pose a significant risk to not only the currency but interest rates in general and the creditworthiness of our market.
Absa Capital, providing financing, risk management and advisory solutions. Absa Capital, born to redefine.